Well, welcome everybody to another episode of Distressed Deals Decoded. My name is Patrick Butler, where real estate problems meet real solutions, brought to you by us, your very good friends at Asset Resolution Advisors. I'm here with my two partners, Steve Schiller. Say hello to the crew, Steve,
Hey everybody.
and Mr. Juan Nicasio.
Hey everybody, how are you? Welcome to another live.
Yep. And so today we're going to be diving into something a little bit different. We've been changing it up for you folks to keep the content fresh and real. We don't have a guest this time. What we're going to do is we're actually going to underwrite a deal live on this particular podcast so you can see exactly what it is we do initially behind the scenes when we get an opportunity. So this property is going to be a single family residence in Cape Coral, Florida. But before we get started on reviewing the deal, Juan, why don't you tell us a little bit about how this deal came about and what the premise was behind it?
Yeah, absolutely. So, if anyone's ever watched any of our previous podcasts, which I highly recommend you do, we focus very heavily on investors, wholesalers, people that are in the game every single day, viewing and targeting distressed assets. So we have a community member inside of our school community at Deal, at Asset Resolution Advisors, and so they learned how to identify distressed opportunity. This one ended up being a lead that came in through their cold calling method, from my understanding. And so when they called the homeowner, unfortunately, this homeowner was in massive distress. It seemed as though they had it as a rental property. And unfortunately, the tenants that were in the property were on substance abuse. And yeah, so they kind of trashed the house a little bit, did not pay the mortgage anymore. And the homeowner was like, that's it. I'm done. I don't know what to do with this. This property is driving me nuts. I'm upside down on the property. I can't even sell the home on the market because I owe more than what the property is currently worth. Plus, got to do some renovations. So the community member brought this to our attention and says, "Hey, is there anything that we can do with this type of lead? What can we do? I understand that there's a potential short sale here, but is there any way that maybe we can buy this as an investment property? Is there any way that we can flip this house?" And so that's how it ended up on our desk. And here we are reviewing the deal so that you guys can see how we break these deals down, how we analyze them, and what are some of the exit strategies for this.
Nice. So we also have, of course, Mr. Steven Schiller. Steve is going to walk us through some of the underwriting steps that he does. Now, this is something anybody can learn how to do. It's part of what we teach in our school community, but you also, as we always say, can have us do it for you. That's the easiest way to go and the most thorough. So, Steve, give us a little insight as to what this deal was. And in fact, let me just tell everybody this property is located at 918 Northeast 17th Street in Cape Coral, Florida. That's on the West Coast. So let's find out what we learned about this property.
All right, so I'm gonna share the property. You guys see it?
Yes, sir.
Okay, so we go through several things when we're underwriting a property. The very first thing we want to make sure, which we've said in multiple of our, multiple podcasts, is this first thing, right? Which is we want to know who the owners are. So we just go into the public records. We got a little bit of color here. Go into the public records and we find out right here who the owners are. So the owners, David Watson and Tori Watson. Why is that important? Well, the most important thing to this is the fact that we need them to be able to sign all the documentation. Any documents, anything that's going on has to be from them. End of story. Um, so the very first piece of what we're looking for is to make sure that the people we're interacting, the wholesaler, whoever we're talking to, that's them or their proxy, right? POA, that's the person that we're talking to. Very, very important because we're going to need them to sign documents. We're going to need them to do all sorts of things. And without their participation, there's nothing we can do. So that's the first thing we're looking for. Next thing, again, public records, we can go and we can find the mortgage. This is the mortgage. Why is the mortgage important? Well, there are a couple of things we're trying to get out of the mortgage. The two most important things that we're looking for are we kind of want to know what the value is. Here's the value. It matters and it doesn't matter, right? it matters from the standpoint of, do we have a short sale or do we not have a short sale? You can kind of guess based on the fact that here was a loan that was made in 2022, so we're only 4 years in. The original amount was $300,000. If it's delinquent, I don't know how delinquent is. We'll get to that in a minute. But if it's delinquent, it has fees, costs, whatever associated with it, then we know it's going to be, on an amortization. It probably only has a few $1,000s off of it over the first 6 years. So we know that they probably owe somewhere between 280, 275 if they've been making their payments, plus whatever other fees have accrued, taxes, insurance, anything else on it. So that's the first thing we're keeping in the back of our mind. The second thing that we're looking for here is we want to know what type of loan it is. Well, if it was an FHA loan, the FHA loan would have been somewhere of here and it would have an FHA case number. That's not what it says. So immediately we go to the bottom of the document. Sometimes it'll say FHA. Most of the time it'll just say this, Fannie Freddie Uniform Instrument. Well, Fannie and Freddie are used by Fannie Mae, Freddie Mac back loans, VA back loans, sometimes USDA back loans. So almost every other loan type will say this. So we need to dig one level in. And the way we dig one level in is we have to see if it has some type of VA documentation. If it doesn't, then it's Fannie or Freddie, which are handled basically the same way. And it doesn't really matter how we manage that property. It's just a matter of who we know the escalation goes to. But if it's VA, it's handled different. And I'll show you, usually after the initial mortgage documents.
Steve, would you read that whole thing to us out loud, please?
Sure, let me start. No, just kidding. So right here is the end of the mortgage document, which it's signed. And then here's the exhibit for the property description. Oh, look what's right here.
Aha.
So there's a VA guaranteed loan and assumption policy writer. So immediately we know this is a VA loan. So we know who the owners are, we know about how much it's worth, or the loan is worth, and we know this is a VA loan. All key components of what we're doing.
Hey, Steve, quick question. So you go into the public records for this. So this is the county public records. Everybody has access to it, right?
Yes.
So it's just a matter of understanding how to find these instruments. They're all in there, easy to find. And again, you can always have somebody do it for you if you've got lots of volume in particular, but good information. All right.
Yeah. And then the next thing we do is we look for other liens, judgments, and assignments. So right here, hint, hint, we found an
Mhm.
assignment. The assignment of mortgage was, it talked about the original mortgage, which was assigned in MERS, and then it was transferred to, right here, Freedom Mortgage.
Mhm.
We look at that because we need to know who we're negotiating with when we get into the loan. So, couple things. We now know it's VA, we know who the owners are, we know about how much it's worth, and we know that the VA loan was transferred to Freedom Mortgage. So, we're now building our profile of what we're having to deal with once everything, right? Once we get the offer, these are all the basic components of who we're working with, what we're doing, how we're doing, what we need to do, who we need to work with, all of those things. So, this is all going into, how we do it. Now, the next thing when we went through the documentation, I will say I believe there's a municipal lien. It was not, I didn't pull it up here because the document wouldn't show. It's something we notate in our system, knowing that there might be a municipal lien. So it's something that we're going to need to deal with. We don't usually get that information until after we get the offer in and we pull a municipal lien search. Fundamentally, it's just part of the negotiation. We just want to know that it's there, right? We kind of know in the back of our mind it's there. But what was also there in the public records was notice of lis pendens. So we know that, let's see here, the date was 2026. So April of 2026, lis pendens went out. So we know this started the foreclosure. So time is starting to not be on our side, right? So it just started. This will probably take another 5 or 6 months before we get to a critical part of what we can and what we cannot do. Again, notated in our system of what's happening, but we at least know here of underwriting is you've got a pending foreclosure, VA loan with Freedom Mortgage. We know about how much, and we know who the owners are. So we've now got all
Steve,
the basic components.
so question, so for a general rule of thumb for anyone that's watching and they come across this notice of list pendants, is the general rule that from the date that this is, I guess, formed here, April 22nd, as an example, that person typically has somewhere between 3 to 6 months to take action? Is that the general rule?
Yeah, actually it's a little bit more. So from the time a Liz Pendens is filed and then it goes to it's about a 30 to 60 days before it goes to the foreclosure complaint gets filed. And then once the foreclosure complaint gets filed, it's about a 6 to 8 month process before the actual judgment is entered. And then it's another
Mm.
30 to 60 days before you have a foreclosure sale. So
And and would it also be safe to say that that depends on the state, whether it's judicial or non-judicial? And if it's judicial, the state may have different timelines as well. So as you start working in your backyard, your market, you'll learn these timelines as well.
yes, 100%.
Mhm. Yes.
Um, so when I see a notice of list pendants in Florida, what I usually do is I try to pull up the foreclosure document. So here's the verified complaint. So again, it all comes together. In the verified complaint, you can again extract data and information that for us is important. I would say for any investor would be important because you can pull out a lot of information as to what's going on. Number one, these are all really good nuggets that I would tell everybody write down because these are all really important pieces that are free of charge right to you if you know how to read them. So number one, if there were if there were multiple lien holders, if there were multiple owners, if there were any type of judgment holders, they would have to be named in the complaint. Now, it's not sure proof because sometimes servicers miss this and they make a mistake and they have to refile. But
Mhm.
in general, they're supposed to notice everybody who has a lien against the property. So, right here, without having to pull title, without having to do anything, we know there's only really one mortgage and that's all we're dealing with. So, that's kind of nugget little one when you start looking at a foreclosure complaint. Number two, they generally will tell you when the last payment was made. Right here, March 1st, 2025. So we're now, we're just what, 16 months delinquent. Generally speaking, on a $300,000 mortgage, which we got from the original document, right? $300,000 mortgage. When you go back and you figure they're a year delinquent, it's usually adds costs is usually somewhere between 5 and 10% of what the balance is. So if the balance is about 280, 290, we're probably talking about some type of $20,000 or so, almost $30,000 worth of fees added to that. So they probably owe 300, 310. And we'll get into that here in a minute because I'll put Patrick on the spot on value in a second. But it's
Do I
probably
need my
has about
calculator?
yeah, so probably
Okay.
has if they probably owe about $310,000. Well, as you go through, oh, look at that. Unpaid principal balance, 280. Okay, so we weren't far off. 280 at about 10%, so they probably owe about 214, somewhere in that range. And that's just basic delinquency fees, whatnot. It could be more. I don't really know, but that really could be what it is. And then we have again confirmation it's Freedom Mortgage and then here they put the note in here as part of what they file. You want to know, should we assume it, what the interest rates are? Well, here it is. It's right here for you free of charge. It is a VA loan. It is 3.875%. That's the mortgage. Um, that's the interest rate. Tells you what the payments are. So it gives you a lot of really good information in here. Um, and let's see what else. And it gives you the mortgage document, which we already went through. So that's really all what I'm extracting, right? That's all the information that I'm pulling out when we're trying to do an underwriting. I'm going to stop sharing here and we'll go back to. So now that we have the basics out of the way, The next thing we do, the next thing we look at is I'd go to Patrick and say, "Hey, Patrick, what's the ARV of this, right? What's the general valuation of this property?" So,
Do you want us to show them that, Steve?
yeah, sure. Show them
All
what
right,
we're
well, give me
looking
one
at.
second here. I'm going to pull up my wonderful. So we use a number of different things here at Asset Resolution Advisors. One of them in particular, I'm going to go ahead and share my screen, is something that we call Realtors Property Resource. Now, it's available to members of the Board of Realtors. I am a broker here in Florida with Asset Res, so we do have access to this site. It's really very handy, and it pulls from all of the MLSs around the nation. Can you all see my screen there?
Yes.
Okay, so RPR, as we affectionately call it, very simple to use. We plug in the property address, and there it is right there, 918 Northeast 17th Street in Cape Coral, Florida. Pretty quickly, we're going to get some information on this. So the RVM, which is their coined term for an as repaired value, is about 514,000. And Steve, you had mentioned that the original loan amount was about 300 and change, got paid down possibly some, but with all kinds of other goodies on top of it. What do we say it was? Somewhere in the low threes, the balance?
It might be, yeah. I mean, the balance is probably in the low threes.
Okay.
Again, this is an RVM, so that has to do with the broader,
Yes.
the broader neighborhood, if you will.
Right. In fact, what the RPR does, in fact, we could go in here and actually adjust this, which we will often do. And the most important aspect of why we do all of this is the property condition bears very heavily on what the as is value is. So the after repaired value of a property may be important if you're a fix and flipper, right? So you know, okay, I've got this opportunity here. There may be some equity, which we're going to do next week on a one that was a home run for one of the investors. But on this one, we're still working our way through the numbers. The question really comes down to what is the as is value of the property. So we can pull reports down on this, and we also know that this last sale was for 289 back in 2021. So
And
yeah, go ahead,
and
Steve.
I'll add, if you look up Zillow and you pull this up, Zillow is going to put this at 370.
Interesting. Let's do that real quick.
Yep.
So so when we get these values and we've come across these, and I'll ask you a question here in a second, one, as we're going through this, we've got a couple things here, right? And this is exactly how we break down a deal and how we figure out what the outcomes are. So the first thing is that we've got one value, the RPR value gives us that's
That's
wrong
the wrong one. Yep.
terrace, yeah.
You got to make sure
Um,
you got the right property too, because
we need street. We need street.
come on, baby, get out of
So
here.
so we've got an RPR value, which is generally the top. It's probably it's much more similar to the ARV than anything, which is in the 500 range. So that's a good number to put into your calculator, if you will, right? That's sort of the top of the market once the property is done. The Zillow is on the street, which we're going to show here, is
Yep.
370.
There you go.
So that's probably a little bit more relatable to that block, that area. Might be some certain conditions that the other one's not doing. So we have a bit of a variety.
And Zillow is also flagging it as pre-foreclosure. So again, that's, your point is really well taken. The best way to get a value on a property is to have your local real estate agent do a CMA or a BPO on it, right? They're going to now
Mhm.
take into account the physical condition of the property. If they are truly local experts, there may be things going on in the marketplace, the neighborhood that could affect the value. And equally important is it trending up in value or is the neighborhood trending down in value? Because these things do take some time. And as Steve mentioned, time is not always on our side with a pre-foreclosure, but we want to make sure we're heading in the right path, not barking up the wrong tree, as they say.
So one, what we would do now is we would now consult with the investor, right? We would say, hey, we're gonna get a CMA. Let's say we get a CMA, the CMA comes back at 320. Just making up a number here. That's not necessarily what we've done here. But let's say the CMA comes in and says, look, based on market condition, da da da, we think the property in a decent condition would sell for 320, 330. Now, you mentioned the property's in disrepair, there's a lot of problems. How would an investor now start discounting off of that 320 based on condition?
Well, number one, you have to go get at least an inspection report because that inspection report is going to indicate, right, and highlight all the major repairs that are going to be needed that you can truly justify when you're going to submit your offer as an investor as to why your offer is coming in a little bit lower than the as is value, right? So number one, I typically do that, and I also gather some photos so that you can see, visual and and real deal data of, hey, this property is in disrepair, right? And so with those two combined, I'm able to go ahead and submit an offer that the banks can go ahead and say, okay, well, I'm seeing what we have here. I see that there are damages. I'm seeing that I have to discredit the as is value because those repairs have to get done. So from an investor standpoint, it is worth to go ahead and spend a couple bucks to go get some pictures taken and to get also an inspection report because that's probably going to be your sure way to try to bridge the gap. Not saying that the banks are going to come back and just take your specific offer, but they're going to take that heavily into consideration.
Mhm. Yeah, facts weigh heavy.
Yeah.
Opinions are one thing. They're like elbows. Everybody's got them, but if you've got documented evidence, it helps a lot.
Yeah. So as we're coming to the end of our of how we analyze this and what we do, we're going to come back and we're going to say, okay, we think the property will value will come in here at 320. We know it's a VA loan, which means an appraisal will be done. We know what the net amount that will be required based on that appraisal, and we're going to discount the CMA because of certain conditions. So what we're going to do is we're going to look at it and say, yes, this is most likely a short sale because the value is probably going to come in a little bit below what is owed, maybe right at it. We probably have a municipal lien that we're going to have to deal with, plus closing costs, plus whatever. And so we come into a range and say, oh, here's where the property is worth. Here's where the offer needs to come back into that we can negotiate. Oh, and by the way, if you're buying it, we're going to formulate what you should buy it as, which is going to be a percentage of that number, and then you can back into it. You're going to get about a 5-6% discount off the actual appraised value. And that's what you can buy this property at. Remembering the ARV might actually be in the 500s. So you
Mhm.
might purchase this probably somewhere in the, mid or high 200s.
Mm-hmm.
If you're not going to buy this and you just want to get some value out of it because you got this deal, then what we're talking about is, okay, we don't need the we don't need the 5-6% discount. And what we could do is we can add a buyer premium on the buyer side to probably pay 3%. So if we're listing this property at 300 to 90, there's a 3% buyer premium that can work through that investor getting the deal, right? Marketing, acquisition, all of those fees that would go into where you can probably make somewhere between $7,000 and $8,000 once the property is sold as a buyer premium. So again, that's a nice little bit of just being able to talk to the person, be able to do it. And we'll do it in another podcast and we'll do it here in the future. If you are a licensed agent, you can participate in some of the commission. And we'll
That's
talk
right.
about how you could do that here in the future.
Absolutely. And I think the really important thing about today's lesson is you go through the process. We've talked about it before. We don't jam a square peg into a round hole. First, let's see what we've got, right? Let's triage the case like a good doctor would do. Figure out what's going on, take the temperature, check the pulse, get the heartbeat, all of these factors going into this so we know what we're looking at. And then, yeah, don't spin your wheels trying to chase something that isn't what it is that you do. So if you're just a wholesaler and you want a big margin on this one, then this one may be something that you'd pass on. But why give up a couple $1,000, $10,000, $9,000 if it's right there for you without you having to do anything more than you've already done? Submitting the deal to Asset Resolution Advisors starts the process for you. We come back to you with all of the findings, and it's up to you as the investor what to do with it. If this was a realtor deal, complete no-brainer as well. they can get the listing as the listing agent. They could get the buy side on the transaction. We'll explain to you in other segments how to do that so that it's compliant and everybody gets paid. And once again, there's money to be made on these transactions all day long.
So at the end of the day, when you look at this, if you're a fix and flipper, right, this is a great transaction across the board because you're probably talking, my guess is on the high side, you're probably talking maybe $100,000 profit by purchasing this, fixing it up. My guess, I don't know, but my guess is there's probably not a lot of structural issues. It's really just painting, repairs, things like that you could probably minimize what your costs are.
Agreed.
Um, if you don't want to do that and you're a wholesaler and you just want to participate as part of the buyer premium, that's somewhere in going to be in the 7 to 10,000, $9,000 range. If you stack and you're an agent, you want to be the listing agent, you can stack another, you know, 5,500, 6,000. So you take
Yep.
your 9,000, you can make 10, $15,000. Or if you don't want to do any of that and just say, hey guys, here's a deal, just go do it, and you want just your marketing fee, you're probably going to make somewhere in the $500 range for that. But literally, it's just, hey guys, take a look at it, go do your thing, and I'm just gonna move on to my next thing. So there are ways to make money across the board on this in different levels at different points and how you want to do it. We just wanted to give you a sense of, what it takes to really take a look at some of these and we're happy to help you out with these.
Absolutely. And there's plenty of other research that goes on the Harrier transactions, if there are probate issues, whether or not that's all been completed. But underwriting really is just like a medical exam. You want to find out what is going on as much as possible with a property to then predict or at least anticipate what the best exit strategy is going to be. That was great stuff. Seeing it firsthand, I think helps a lot of folks. And you get the loan number from that documentation as well, which is always very important. Oftentimes, the homeowners don't have that handy if they don't have their mortgage payment statement available. So great stuff, Steve. Juan, always good to see you and bringing these deals in. Folks, why does Juan get the deals? Because he's got value that he brings to the table for everybody. Anything you want to say before we close this particular segment out, Juan?
No, just don't give up on any of these deals. There's always an opportunity. This is a prime example of something that typically doesn't look like an investment deal on paper, and as you peel back the onion, you find some surprises. As we spoke in other podcasts, the more of these that you submit, the more opportunities you're going to find. We have deals where I don't know, there's errors in the mortgage recording and bye-bye mortgage, right? You have instant equity. So please, just follow us, follow through, join our community, come learn how to do this stuff because there is a lot of money to be made in your already marketing strategy that you have. Don't bypass these opportunities. Even if it seems like it's a small deal, they can turn out to be very, very big ones. So I really appreciate Steve breaking that down, peeling back the onion and showing us behind the curtain on how to read those documents. You guys learn how to do that, man, you guys can go fish for days, man.
Excellent.
Awesome.
Well, so in closing, then, if you happen to be working on a short sale or a transaction that you're not quite sure what to do with, reach out to us at Asset Resolution Advisors. Our website is readily available, assetres.com. We've got a school community where we can show you how we do all this stuff and also the ability to partner with us. So until next time, ladies and gentlemen, we look forward to working with you on this and every deal moving forward. We'll see you next time.